Hey guys, it's James, and today I wanted to take a look at the valuation of Apple, or trying to determine the intrinsic value of Apple with the discounted cash flow model and Graham's model. We will also take a look at the dividend discount model, as Apple does pay a dividend. I don't believe the dividend discount model is an accurate valuation technique for Apple, as it has not been one of the long-term dividend paying companies. And when it comes to the dividend discount model, I will fill out the numbers here, but I'm not going to, I will take whatever it is showing me with a grain of salt, as I believe the dividend discount model is best suited for companies that are under the umbrella of the dividend kings and dividend aristocrats that have been paying a very consistent dividend over the course of 25 to 50 years and beyond. So first up, let's take a look at the dividend discount model, and then we will jump over to Graham's model and then finish up with the discounted cash flow model. So for the dividend discount model, we have to figure out what their most recent dividend payout payment was, their 5-year dividend growth, the risk-free rate, which is the 10-year bond yield, and then the return of the market. So this right here is going to calculate our capital asset pricing, or CAPM, to be able to determine our rate for our dividend discount model. So the current risk-free rate is 3%, and we're going to choose a 10% for the return of the market. We can jump over to Seeking Alpha, Apple's page, come over to their dividend tab, and under the sub tab dividend scorecard, we can see that their annual payout for the forward forecasting is 92 cents, and then their 5-year dividend growth rate is 8.75, and they've paid a dividend for about 9 years. Coming back over to the spreadsheet, if we put in 0.92 and their 5-year dividend growth rate was 8.75, we can see that the dividend discount model spits out a intrinsic value of $26. But if we were to change the return of the market in this calculation, if you recall the calculation for CAPM, which is embedded in this formula, it takes into account the beta of Apple, which allows Apple to either grow faster than the market or slower than the market. So if you do change this return of the expected return of the market, you will see a change in the intrinsic value. If we change this to 9%, we can see that Apple's intrinsic value would start to go up. If we change it to about 8.5%, you can see that it continues to go up. And you can see what happens when we change it to 8.5. The intrinsic value is 86. Let's come down to Graham's model, and let's try to determine the growth rate for Apple. If we come over to Seeking Alpha's page under the momentum, we get to see some of the price performance historically. If you average out the 10-year price performance for Apple, that is 55% per year. And the calculation is very similar for the 5-year and 3-year CAGR numbers for their price return. 279 divided by 5, you're going to get around that 50 to 60% growth. And then the 3-year CAGR, 176 divided by 3, again, you're going to get that 50 to 60% growth for Apple. So if we put that in the calculator, if we put, say, a conservative 45% growth rate, and with Graham's model, you have to put in the full numbers, as it would give you an odd number if you put in the percents. And then for the AAA corporate bond rate today, that is sitting around a 3.97. With a 25% margin of safety, we're looking at $265 for Apple, where the current price is $138, and the difference would be almost 100%, or double the current price of Apple. Now, if we were to be a little bit more conservative with our growth rate, where we would assume that Apple would grow half as fast as it has in the history of its performance, we would see that the intrinsic value would come down to $189 compared to its current price here, which is a difference of 36% higher than its current price. So it would have a 36% upside. Now coming over to the discounted cash flow model, it is a little bit more involved. First off, you have to find the free cash flow numbers of the previous 5 years, 2021, 2019, 18, and 17, and then find the total cash that Apple is holding, their total debt, a perpetual growth rate, and the discount rate that you would like to use, as well as a margin of safety. Now, to be able to find the free cash flow numbers, you can simply type in Google and type in what is Apple's historical cash flow numbers, and we come over to a website called Y Charts, and it is the most up-to-date information I have found online for Apple. So what I did was added up each of the quarterly cash flow values for 2021, 2020, 2019, 18, and 17, and I came to these figures here. For 2021, 101 billion, 2020, 80 billion, 2019, 63 billion, 2018, 61 billion, and 2017, 53 billion. And then to be able to find the cash and debt numbers, came over to Yahoo, came over to their financials tab, clicked on the sub tab balance sheet, their current total current assets, cash and cash equivalents is about 62.6 billion. Come down on the same table, their total debt is 124.7 billion. With that in the calculator, I chose a 2.5% perpetual growth rate and an 8% discount rate, which is pretty standard, 8%, with a 25% margin of safety. So here is the outputs for our discounted cash flow model. Just to sum it all up, the intrinsic value is $157, which is about a 13% difference than its current price. And if we take a look at CNN Money and we take a look at what some of the analysts are forecasting, their low, median, and high, and our discounted cash flow model and Graham's model, they are putting us in the range of the median to high for Apple. If you guys want to have access to this calculator and be able to play around with these numbers and be able to determine your own intrinsic value for different stocks and different securities, you can head over to my Patreon. I have this available. I have 3 separate calculators. This is my calculator number 2. Come over to the valuation tab, and this is where you will find these models. If you guys want me to do another security or another asset, let me know. And with that, thanks for watching.